know from inspiration, history, and nature, we deserve a return to the success and growth of generations past. A birthright being squandered by corruption in Albany. And the depredations of an insecure, scheming mountebank posing as governor, who loathes both us and himself. As liberty beckoned to enslaved peoples behind the Iron Curtain via American broadcasts after World War II, we now say, believe, rise, and join us. Welcome to Radio Free New York.
All right, everybody. Welcome to Radio Free New York. I'm your host, Andrew Hollister, and I'm here in the WYSL studios with Bob Savage.
Hello, everybody. I've got my surgical mask on because Andrew's in here and he's a little under the weather.
Yeah, still not better. So you guys might have remembered Friday I was, going through the show and I had my cough drops, which I've still got here.
Hold it up for the folks at home. That's right.
Yep. The honey vanilla flavor is pretty good, though. You know, I can't remember the last time I had cough drops. I don't know what the other ones were, but honey vanilla is not so bad.
Still waiting for the single malt Scotch flavor to come.
There you go.
But then, if you're going to have single malt Scotch flavored cough drops, why not just have single malt Scotch? But that's just me.
Yeah. Well, it's funny you mentioned that because I mentioned quite a few shows ago that I don't really drink, but when I do, it's usually bourbon, right? And so somebody got me bourbon flavored chapstick. And I was cleaning up the house over the weekend. It was like the only thing I was capable of doing. And we still had some of the Christmas decorations out. And there's a stocking there, my Christmas stocking. I pick it up and I'm like, oh, there's something in here. I pull it out and it's bourbon scented shower wash. And I'm
what?
Like, yeah. And so, which is totally awesome. It's totally awesome. But I was like, anytime I shower with this, I will be absolutely terrified to get pulled over because just imagine rolling the window down after a shower with bourbon-scented bath wash.
Well, so much for showering with your favorite state trooper.
Yeah.
I always wanted to. I wanted to invent nitrous oxide tissues. So that when you blow your nose, hey, this is not bad. All of a sudden, I feel a lot better.
Yeah, absolutely. So it looks like people are filling in the live stream, which is great, and there's people listening on the radio waves. So welcome everybody to the show. I am still a little under the weather, but not as bad as Friday. I didn't go back and listen to the Friday show because I was afraid that I'd see how slow I was probably moving. It was probably really bad.
No, you're fine.
Was I? Pulled it off good? We'll see. Maybe I'll check it out. But the last show we talked about sin taxes and basically the idea that the government has been using taxes to deter behavior, essentially. So you see this with the cigarette tax. They tax it so that it's expensive, and the idea is it will deter you from doing things. They do this with a whole bunch of other stuff. They slip in the gas tax to hurt you for carbon emissions. They're talking about an ammo tax. They want to tax you more for purchasing ammunition. They just, slip in these places. They try to make it unaffordable for the average person, make it cost more so you can't do as much. And then we transition to talking about, well, so essentially government's establishing that tax is a bad thing and it's used as a punishment. Why are we then being taxed on our income and owning property? Because if taxation is being used as punishment and discipline, are we then punishing people for working? Are we then punishing them for owning property? And I would say, yeah, it feels that way. So I ended up doing my taxes after the show, and it did not hurt as bad as I thought it was going to. But it was still pretty painful. I was still feeling a little sting here. And so I kind of went on to talk about how the average New Yorker gets about a $3,000 tax return, and how bad that is. How instead we should be taking that money, keeping it in our pockets, investing it instead of waiting for a once a year payout. So during this show, I give you all of that kind of backstory to let you know that during this show, I want to talk a little bit about if you decide to take that path, if you decide that, yeah, you know what, let's not give Uncle Sam an interest-free loan of $3,000 every year. Let's put that in our own pockets. Some of the ways that you can use that money to get out of debt, to really break through. Let's talk about ways that you can take that money and really get out from underneath probably the most prevalent form of slavery today, which is debt. I mean, debt has really taken on probably almost every household in America.
It's the most common form of slavery, except for slavery, which exists in a lot of parts of the world.
Yeah, no, absolutely. So the very first thing I talked about just taking that money and putting it in a high yield savings account. And I'm going to go ahead and just read those off to you guys because I went ahead. Oh, that's actually the wrong button. I hit the wrong button for you guys. After the show, I actually went and spoke to my accountant about some of these high yield savings accounts, and she hadn't realized that the interest rates have gotten that high. And I want to just kind of throw this up for you guys to know about this. There's 3 high yield accounts right now that I know of. I actually know of a fourth one that's not on the screen here, but BBVA Compass. I don't know who BBVA Compass is. I'm not familiar with them. There's some sort of bank, but they have a 2.4% APR rate right now in their savings accounts. Minimum deposit is $25. So if you were to take your tax dollars that you would normally give to the government and invest it in their account, or there's another account by CIBC Bank. I really don't know who they are either, but there's a minimum deposit of $1 to open an account with them, and you get 2.39%. Then you've got Goldman Sachs, same thing, minimum deposit of $1, you get 2.25%. If you were to do this just year after year with your tax refund that you're normally getting, and instead of getting that refund once a year, every month, putting that money into that savings account, you would be doing pretty good. What you would look at is at the end of 5 years, you would have pretty close to $20,000, $19,204.42.
That's if you've saved how much? And how frequently?
Basically $250 a month. That's
$3,000 a year.
Yep, $3,000 a year. That's the average tax return the New Yorker gets today, according to, I think it was Business Insider is who I pulled that from. And I did the rates low. I did at the 2.2%, which those 3 accounts actually have a higher yield than that. So if you do the math on that means you've gotten yourself over $1,200 in interest in a very short time, 5 years. I mean, that's great. But not just that, you've got that $19,000 in the bank. You know, so now when you go to take that step of maybe it's time to purchase a car, maybe it's time to put a down payment on a home, maybe it's time for any of those things. You don't necessarily have to go in debt now and pay somebody an interest rate. So you've gained interest as income, and now you can prevent from paying additional interest as well by following a plan like that. So that's just kind of a basic idea of the direction I want to go with you guys on this.
Say the name of the bank again. Was it BBVA Compass?
So let me go back here and find.
Sorry, I thought you still had it on your screen there.
Yep, BBVA Compass.
Right.
And it's 2.4% APY on all balances with a $25 minimum opening deposit. So that sounds like a good deal. The account I have right now is actually a Barclays savings account. When I opened my account, they were the ones that had the highest. This was only a few months ago. I mean, it was 1.9%, and that was beating everybody. They've since increased it to 2.2%, which is why I do my projections on. But these guys are at 2.4. So, I mean, if you've got some money to put in the bank, it doesn't even matter how much. One of the things I do, my direct deposit, a percentage of my paycheck, always goes into my savings account. That way I know right from the date of payday, I'm gaining interest there.
Pay yourself first.
Yep, pay yourself first. Absolutely. So let me tell you guys about what we're going to talk about throughout the show here. I want to talk about just debt, how to pay it off early, because, this show is Radio Free New York, and we talk politics a lot, and I love talking about politics. But at the same score, I think it's important for people to be free in other ways as well, and being financially free is probably the best possible way you could be free. So before I do that, and before we go on break, I'm going to tell you guys some of the success I've had, because I know a lot of you respect my views on politics and what I do for research, but you're probably wondering, well, what does Andrew know about finances? Why would he be talking about this? I'm not a professional finance guy. I'm not a financial advisor. But what I am is I'm a guy who's 30 years old. I bought my first dealership car when I was 18. When I was 21, I purchased my first home, purchased my second home at 25. My wife and I, we paid for our wedding in cash. We didn't have help from friends or family. We didn't go into debt. 2 years ago, we paid off all of our student loans, all of our car loans, all of our credit card debt. Last year, I paid my first mortgage in full. Today, I'm effectively debt-free. I'm saving money. I'm setting it aside for my kids. And probably a bunch of you are thinking, oh, maybe you're rich. No, I did all this with my average income over those years was less than $40,000 a year. And in some instances, $30,000. And for some people, that sounds rich, but it's below the state and national average. And I did all this taking usually 2 weeks of vacation each year. So I'm just going to talk with you guys about how I did it and share that with you guys when we come back here on Radio Free New York.
Your business relies on computers and technology to operate. Slow, unreliable networks and servers can cause unplanned downtime and affect your bottom line. The experts at Simple Tech Innovations are here to help. Their preventative maintenance program ensures that your computers and network are kept up to date and monitored for any issues, keeping your business running smoothly. They also help clients achieve HIPAA, PCI, and New York State cybersecurity compliance to keep your network safe and secure. Whatever your business IT needs are, Simple Tech Innovations should be your first call. They've won the Best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. Call them today for a free consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
Avon Feed and Supply announces a new taste in local cheese. From dairies in Livingston, Genesee, and Wyoming counties, enjoy Craig's Creamery Cheese from 8 family farms made right here in Livingston County. Craig's Creamery Cheese, simply made with all natural ingredients. Choose your favorite variety exclusively in our area at Avon Feed and Supply. Bottom of the hill, West Main Street in the village of Avon. MasterCard, Visa, and Discover cards always welcome.
Why do businesses choose to move their website from Wix and Squarespace to Simple Tech Innovations? Maybe it's their excellent customer service or attention to detail. Maybe it's their ability to give a truly customized solution. Or perhaps they just like the fact that Simple Tech is a local small business that builds great relationships with its clients. Whatever the reason may be, you can rest assured knowing that the local team at Simple Tech has your best interest in mind when building or updating your website. They're hands-on and love helping customers achieve their goals. But don't take my word for it.
Coming back.
Won the Best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. If your website doesn't match your dreams or isn't achieving your goals, give the professionals at Simple Tech Innovations a call today for a consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
You're listening to Radio Free New York
on the WYSL stations.
Hey guys, welcome back to Radio Free New York. I'm your host, Andrew Hollister. And during the break, I kind of realized that my plug for the rest of the show maybe sounds like some get-rich-quick promo.
It's an infomercial.
Yeah, some infomercial. No, that's not the case. I mean, we all probably know the secret to paying off debt, and we probably know that there's a really basic principle to follow in life, and that is spend less than you make. You know,
it's like how you lose weight.
Yeah.
Eat less.
Yep. Yeah. Exactly.
Exercise more.
Yep. It's a rule that spreads across life. It doesn't have to be finances. It could be your weight. It could be a whole bunch of things.
More income, less outgo.
Yep. Absolutely. And I think sometimes people think about that and they think that that's what they're doing. But things have become complicated in life. There's a lot of things that people just assume, like when they pay their mortgage, you just pay your mortgage and you assume I'm doing the right thing. I'm paying my bills on time.
One time you could deduct the mortgage interest.
Yeah, well, and that's the thing. I talk with people. They're like, I like having a mortgage. I'm like, really? Why? And they're like, well, because I can write off the interest. I'm like, what if you just didn't have a mortgage? And they're like, but then I don't get the write-off. I'm like, you're paying for something, like stop.
It's like all the Bed Bath & Beyond coupons you get in the mail. It's a 30% off. I got to go down there and get my 30% off. It's like, if I keep on spending like this, I'll get rich.
Yeah, absolutely. And that's actually something we're going to talk about a little bit later, is the idea of a refinance. And sometimes the idea of a refinance is a terrible, terrible decision. And I'll give you some examples of that, because with my first home, refinance was an option. And when I ran the numbers, it was not an option. But a lot of people, they don't necessarily know that, and if you don't have a mortgage person who is ethical, we'll say, and we've seen a lot of problems with ethics in the banking industry, a lot of problems. And there are good people too. Don't get me wrong. There are absolutely good people that you can trust. But going in and knowing is the best thing you can have, because then it doesn't matter if you can trust them or not, just having the right knowledge. So before I talk about mortgages, I do want to give you guys just two things I think are really, really important. And this is stuff that probably should be taught in schools, and it's not. And I talk about financial literacy and how we teach things like Pythagorean theorem. We teach things like algebra. We teach things like a sine and cosine in school, and we quiz kids on it. And if they can't figure out, the degrees of a triangle, they don't pass high school. But we don't help them with taxes. We don't tell them about debt and interest. So the very first rule that I follow personally every single time I look at the potential of going into debt is never take on debt that you can't pay off early without a penalty. That's number one for me. I will not take on any type of debt that I cannot pay off early without a penalty. The second thing I do, I don't take variable interest debt. I don't. I know some people, they have a strategy to do that they follow, and maybe they're successful with it. I've never really had anybody tell me that that's been successful for them. I'm sure somebody exists. Maybe somebody can comment in here on the comments, but I've never seen somebody truly be successful. I know maybe 5 years ago, the mortgage industry was pushing people really hard to take on variable interest mortgages, because the interest rates were like 3.5%. And they were telling people, if you take a variable rate interest, then they could have, 3.25%, 3%, maybe 2.9. Well, I got news for you. All those variable interest rate people right now probably have approaching 5% mortgages. Whereas if they took a locked in fixed interest rate of 3.5%, they'd be doing okay. Now, if they took that 3% or that sub 3% mortgage and they paid it off before it went out, good for them. Like, maybe that was the right thing, but I don't see many people paying off mortgages in 2 to 3 years. So those are just my top two rules for myself personally that I take anytime that I'm going into debt, right? And just because I'm debt free today doesn't mean that tomorrow I will continue to be, because there's times that it makes sense to take on debt, and we'll talk about that too. But the first thing I want to talk about for you guys is mortgages, because I'm really excited that I paid off my mortgage. That was like a huge, huge accomplishment for me. And I want to just tell you guys the steps I took to get there and some basic concepts that I think everybody should just know about. So the first thing that I'm going to say is, look at your bill and see what the principal is that you're paying. Some of you, if you've never looked at this before, and I think by law now it has to be really apparent, but if it's not, check it out, because you'll be really surprised that you're paying so much in interest and so much in taxes, and your principal is really this small, tiny, minuscule part of your mortgage. So what I did this morning, actually, I just went on a real estate website. I looked for a fairly average Western New York home. And what I did is I found one for sale in Spencerport. It's been on the market for a couple of weeks, it looks like. Pretty basic home. I think the price was $179,900, which is kind of an average price. It was actually on the low end for Spencerport. So I guess houses go for a decent amount in Spencerport. So what I did is I found this house. I pulled the tax records. I went ahead, grabbed the insurance information, all of that. And the way it broke down, I'm gonna show you guys, is like this. So the principal that you would pay if you were to purchase this home today, you'd put down a deposit. I just threw in there for basic numbers $20,000. So you'd actually go in debt for $159,900, just shy of $160,000. What that means is your mortgage would be $1,347 a month. But when you're making those payments, your principal payment, the part that actually takes away your debt, is only 14.66% of that. That's not great at all. It's $209 a month towards your $160,000 in debt. It's not good. So what I always do, any debt that I take on like this, and this is what I did, is I set up that auto debit that has every month to always be double what the principal was. So when I went into debt, I already knew that I could afford not just that minimum payment, but that minimum payment double the principal. So instead of paying that $1,300 a month, which for some people it would be very difficult depending on what your income is. My mortgage was not this much, but I know this is kind of like the average for this area. I would look at it and go, okay, I'm going to commit not to paying $1,347 a month. I'm going to pay $1,547 a month, and just for fun, I'd round it up a little bit. I'd make it $1,550. And what does that do, right? So before I move on to that, I want to tell you guys the breakdown of this payment. $209 is your principal. $604 is the interest. So when you take that debt on, you're already paying 3 times your principal in interest every month. Now it goes down month by month as you make your payments, but still, that's a lot of money.
And the way they structure those loans, you always prepay the interest.
Yes, absolutely. So it
takes you a while to, if you got a 30-year mortgage, you're not getting any equity in that property until you get to year 10.
Yeah, and that's exactly right. 471 of it is taxes. So you're paying 3 times your principal and interest. You're paying twice your principal and taxes. Then $63 is property insurance. Pretty hard to get away. It's hard to avoid that. But then $79 is private mortgage insurance. And why did I put this in here and bring it up? Because if you make a down payment of less than 20% of the mortgage, you get charged private mortgage insurance. So that's another thing. If you do save your income tax money and you set aside, you might be able to put down a down payment that is actually large enough that you don't have to pay PMI, which could be $100 a month that you're saving every year.
Plus, you can get a better interest rate too.
Yeah, you'll get a significantly better interest rate. So, and actually, Joe just commented in, and this is good. I see a lot of comments coming in here. Joe's comment is great because this actually happened to me. So when you're making your principal payments, you have to tell your lender that it's a principal payment. Otherwise, they're put it towards prepaying more interest. And I specifically wrote a check to my mortgage company and specified it for principal with a written and signed letter.
And they didn't do it?
And they didn't do it.
Wow.
And I almost had to take legal action because they essentially took, it was a couple $1,000s I sent. And they literally took it and prepaid it towards interest instead of my principal and tried to give me the runaround on it. And I'm like, you had a handwritten signed note from me, and on the check it says principal, and I see the scanned copy of the check that you deposited. And, you know, they're like, oh, it's just a clerical error. I'm like, that clerical error cost me thousands of dollars in interest.
Yeah, they're betting that you didn't know.
Yeah, so absolutely, that's a great point. So so this is the first piece. This is the breakdown. When we come back from the break, I'm going to show you how different this would look if you doubled your principal payment. So we'll be back here on Radio Free New York in a minute.
You're listening to the voice of liberty. WYSL. AM 1040 Avon, Rochester, FM 92.1 Rochester, FM 95.5 Spencerport, and WYSL1040.com everywhere.
Why do businesses choose to move their website from Wix and Squarespace to Simple Tech Innovations? Maybe it's their excellent customer service or attention to detail. Maybe it's their ability to give a truly customized solution. Or perhaps they just like the fact that Simple Tech is a local small business that builds great relationships with its clients. Whatever the reason may be, you can rest assured knowing that the local team at Simple Tech has your best interest in mind when building or updating your website. They're hands-on and love helping customers achieve their goals. But don't take my word for it. They've won the best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. If your website doesn't match your dreams or isn't achieving your goals, give the professionals at Simple Tech Innovations a call today for a consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
We'll treat you like family at Mark's Pizzeria. We'll treat you like family at Mark's Pizzeria. Great pizza, fresh and good. Simply the best in your neighborhood. Come in, we'll get to know you. Call you by name. We can bring it to you any time of the day. Mark's Pizzeria. We'll treat you like family. Mark's Pizzeria.
Your business relies on computers and technology to operate. Slow, unreliable networks and servers can cause unplanned downtime and affect your bottom line. The experts at Simple Tech Innovations are here to help. Their preventative maintenance program ensures that your computers and network are kept up to date and monitored for any issues, keeping your business running smoothly. They also help clients achieve HIPAA, PCI, and New York State cybersecurity compliance to keep your network safe and secure. Whatever your business IT needs are, Simple Tech Innovations should be your first call. They've won the best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. Call them today for a free consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
Radio Free New York on WYSL. AM 1040, FM 92.1, and FM 95.5 West.
Hey guys, welcome back to Radio Free New York. I'm your host, Andrew Hollister, and it sounds like we've got a caller in on the phone.
Indeed we do, and that would be Joe. Hello, Joe. How you doing today?
Okay, how you guys doing?
Good.
Andrew, it's Joe Resch.
Yeah, I recognize your voice anywhere, Joe. How's it going?
All right, how you doing today?
I'm doing good.
Good. I'm not too sure where this fits into the program, but I did mortgages like I posted on the on Facebook back in 2002, and got some insider scoops and learned some pretty crazy things that I never would have known if I was on the retail end, the customer end of mortgage purchasing.
Yeah. Well, share something with us then. What's an insider thing that everybody who's listening right now?
Give us some nuggets, Joe.
Well, one of the things that a lot of people have to understand is that qualifying is everything. Regardless of what the rate is, regardless of what your credit score is, there's more to qualifying than just that. And back in 2002, I don't know how it is now because I've been out of the loop, but there was this big thing back in the day where American Lending Partners and Lending Tree, they used to be a company that you would put your information into, and they advertised themselves, when banks compete, you win. And that can't be far from the truth, because basically what happens is you only get what you qualify, regardless of what bank decides to pick you up and make you an offer. The tricky part to it, though, where the banks almost seem to win, is people not knowing how to pre-qualify themselves. And that's a big thing for everyone to know. Even now, when companies like Lending Tree and American Lending Partners aren't big on TV and operating the way they were anymore because of the whole collapse back in 2008, they kind of all disappeared at that point. You still have companies out there, banks and mortgage companies, that still want your business, and they rely on their loan officers, who, it's a fancy term for salesmen, to be quite honest with you. They want their loan officers to get that mortgage, no matter how they can. And that's where the qualifying comes in. So when it comes to qualifying, you can have a credit score of 800, but if your loan to value ratio of your home when you're refinancing is not right, that can go against you. If your debt to income ratio is not right, that can go against you. And there are a bunch of compensating factors, like your school district and what your taxes are, that you don't even think about and take into consideration when it comes to getting the loan. And the loan officers have to look at all that stuff. So you sometimes will get hit with options to either take a high rate due to all of these negatives, or to possibly purchase points on the front end and the back end of a mortgage in order to lower that rate, which means that you're prepaying a lot of interest, and you're prepaying to buy a rate, which kind of goes against the point of refinancing. And when it comes to purchasing a mortgage outright, all of those same things apply. It's not just to refinancing. It's also to purchasing a mortgage. You don't have the loan to value ratio in effect, but you still have everything else. You've got your debt to income ratio, you've got the value of the property, the purchase price of the property, the taxes, everything taken into consideration. And the mortgage companies look at that. They don't just look at your credit score. They look at how your taxes are, what your income is, and all those things that make you pay. And they put that mortgage payment first. That mortgage payment, it might not be first to you, but to the bank, it's number one. It comes before your kids. It comes before your car insurance and car payments. It comes before all of that stuff. If you own a business and you have business insurance and you have business payroll and all that stuff, that's all secondary to the bank. The bank comes first to the bank. So they'll either turn you down, or they'll make you an offer that you can't refuse, that they wind up benefiting from.
Yeah.
And that's one of the things that people need to know. You can go online and you can learn through different places on the internet how to pre-qualify yourself before you sit down with any lenders, because unless it's a lender from a local bank that you know personally, and you know that they're not going to used car salesman you got to be very careful, because keep in mind, the mortgage industry is also a commission business. So you've got a bank with a salesman teaching them how to qualify you under any circumstances possible. And then you've also got a salesman that needs that commission because he's not on a regular payroll. So it's a tricky business for the consumer to enter without any knowledge of how any of this works. So, just keeping track of your credit score is just one little minute thing that most people, need to know. And it's not the only thing for you to concentrate on.
Yeah, awesome, Joe. Thank you so much for the call. This brings up a really great point. A lot of people know that there's shady parts of the car industry, right? That's just something that the car industry has been known for a long time. I'm sure they don't like me saying that, but when people think of a used car salesman, it's not like an altar boy, that comes to mind. They've got this idea of my one buddy, he'd always call Joey with the golden chains, like that. This is the image that comes to people's mind, and their industry has really worked hard to try to improve that. But the mortgage industry, think of it this way. If you were to go buy a used car and you're just going to go to a dealership, or even a new car, you've probably done some research first. You found out that you like this car, that's got the features you want. You know what this car normally sells for. Chances are you've already shopped a couple dealers and you know that they've got the right price. Maybe they've got the warranty you want. Maybe they've got some special perk. It used to be a free toaster, right? But that's not the, the case anymore. You've done that research, but I think a lot of people, when they go into a mortgage, they haven't done any of that. It's kind of just like, whoever's going to give me something. And you really, really gotta, like Joe said, you gotta know what's going on. You gotta know how they're going to take your debt and use it for you or against you. When you look at this, in the end, they're going to make a crap ton of money off of you. And I'll give you a really good example. So that house that we were just talking about before we took the break, I'm going to go ahead and pull that up real quick. We talked about what the mortgage would be. Now, let's talk about what you're going to pay on this home here if you were to pay your principal if you were to double that. So we talked about this house after down payment, it's about $160,000, right? You made the commitment to yourself, to your family, that you want to get out of this debt sooner. So you're going to pay an extra $200 a month towards principal. Guess how much money that saves you on this mortgage? Just throw a number out there.
60 grand.
60 grand. Pretty close. Less than that, but it saves you $49,173 and saves you 9 years and 11 months on the mortgage. So
huge.
Yeah, it's totally huge, and that's what people need to see. Now, here's the thing: that mortgage, $160,000. What did the bank actually get paid back? $292,834.
That's a nice return.
So that's a great return. I mean,
what's wrong with that?
Mortgages are super they're profitable. Absolutely. Yeah, they're very lucrative. And here's the thing: you could be down to the last few years on this mortgage, and you can't make the payments. They can foreclose on it and then resell it too. So they've gotten almost all their money back, and then they can sell it out and take that money. So, yeah, I mean, it's definitely an industry that people have to be just really, really careful of.
Yeah, and here's the other thing too. When I was doing those mortgages, a lot of the work I did was refinancing. That's a more dangerous area than purchasing. Mm-hmm. Usually people that are purchasing homes, there's different stories to everybody, but they usually have their act together. With these refinances, I can't even tell you how many times I had to almost play the psychiatrist as well as the loan officer for some of these people, because you've got bad marriages, you've got a loss of job, health failure, so many things, drugs and substance abuse that cause other people or the families themselves to go into disarray with their mortgage, and they're trying to save their home, so they get desperate. Mm-hmm. And if they're not educated on how the system works for them and against them, not just for them, then they can really put themselves sometimes in a worse place than when they first called you.
Yeah, no, absolutely. It's funny that you mentioned that, because refinance is actually the next thing that I was going to talk about, how refinancing your home can actually be a trap. And I'll give you the example with the home that I ended up paying off. I first looked at refinancing. That's what I was going to do. I was going to save about a point of interest. I was going to reduce the term of my mortgage. I forget, by like 10 years or something like that. But the thing was, they bundle in the what's it called, the closing costs, which at the time was going to be about $3,500 into this mortgage. So, because that's really what a refinance is, really just another mortgage. That's really what it is. It's a new mortgage with different terms, and you pay closing costs again. The closing cost of $3,500 was more than I was going to be paying in interest for the remainder of my term anyways. So they weren't just going to get $3,500 from me. They were going to get $3,500 plus interest on that $3,500 and interest on my balance versus not doing the refinance. I forget exactly how much money I was going to save, but it was ridiculous. It was like, why would I refinance? But to the average person who doesn't understand that, and I found in certain cases, the loan officers don't tell you that you're paying closing costs. They just say, oh, we're going to refinance you.
Wait, don't they have to disclose that?
You sign piles of paperwork that have it.
So you don't read it.
So yeah. So
they bank on you. They bank on you not being educated and not paying attention.
Yeah,
and
absolutely.
Paying attention includes reading that fine print.
Yeah, which I mean, it's a stack of papers like you wouldn't believe, and it's just real quick. Oh, your signature here. Oh, your signature here.
They just keep shoving all these papers at you.
Yep.
You're like Radar O'Reilly and MASH.
Yep, absolutely. So that to me, I forget what the actual number is. I have some notes here that say if your home costs less than $60,000 or your balance is less than $60,000, it probably doesn't make sense to refinance. I'm not sure where I got that information from. It could have been just some calculations on interest based on the current rates. But have that conversation. I mean, really, if you're going to refinance, don't do it just based on the monthly payment that they give you, because you got to think of it in terms of, especially if it's your bank who you already have a mortgage with, you got to wonder what their motive is. Like, why would they come to you and agree to just take less of your money? That should be a red flag. I mean, your car dealership never calls you up and says, hey, interest rates have changed. How about this? You keep the car you've got, but we're just going to lower your payments $100 a month. Like, that doesn't happen because they're not making money that way. So you got to know what's going on with the refinance. Sometimes it's a trap. Guys, we're going to take one more break here. We will be back at Radio Free New York.
Your business relies on computers and technology to operate. Slow, unreliable networks and servers can cause unplanned downtime. And
hey, Joe, we're good. Thanks very much. Appreciate your help.
All right, no problem.
All right, take care.
Yep, bye-bye.
date and monitored for any issues, keeping your business running smoothly. They also help clients achieve HIPAA, PCI, and New York State cybersecurity compliance to keep your network safe and secure. Whatever your business IT needs are, Simple Tech Innovations should be your first call. They've won the Best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. Call them today for a free consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
I'm Las from Action Towing and Service. The people really make this place incredible. I feel at home. I love what I do. I love the people that I work with. The owner of the business is actively involved. He is a veteran. We have a very close relationship with all of the staff. Every employee there is known by name, and we really, really work hard on giving that home feel or the family feel. Please give us an opportunity to win your business. Come down and visit us at 275 Marketplace Drive, right off of Jefferson Road.
Why do businesses choose to move their website from Wix and Squarespace to Simple Tech Innovations? Maybe it's their excellent customer service or attention to detail. Maybe it's their ability to give a truly customized solution. Or perhaps they just like the fact that Simple Tech is a local small business that builds great relationships with clients. Whatever the reason may be, you can rest assured knowing that the local team at Simple Tech
Tony's going to come do a show.
building or updating your website, they're hands-on.
No, thank you.
Helping customers achieve their goals. But don't take my word for it. They've won the best in Rochester 8 years in a row and have an A+ Better Business Bureau rating. If your website doesn't match your dreams or isn't achieving your goals, give the professionals at Simple Tech Innovations a call today for a consultation at 585-200-3182. That's 585-200-3182. Simple Tech Innovations.
You're listening to Radio Free New York
on the WYSL stations.
Hey guys, welcome back to Radio Free New York. I'm your host, Andrew Hollister, and we're just wrapping up talking about refinancing. There's one more thing I want to give you guys about refinancing your home. Don't get me wrong, there are times it makes sense. I have not been in a situation where it makes sense. But there's another thing that a friend who I was talking to, this was maybe a couple months ago, they were going through kind of a trying to figure out their finances, was getting married, and was basically put under the impression that the only way to put his wife's name on the house was to refinance the home. And that is not the case at all. And I want to make sure that everybody here knows that you can just add your spouse's name to the deed of the house. It's a filing to the county. I think it costs $300 and some change for the filing fee. Might be cheaper than that. You do not have to refinance the home to add somebody's name to it. So that's just one thing I want to make sure. Like, there's no reason you should have to pay thousands of dollars in closing costs to add a significant other's name. You can also do things like put them in your will. That's another option. But I want to make sure, because if one person thought that, I'm sure there are others who thought that. And this stuff isn't taught in schools. And how often do people buy homes? How often do people refinance homes? Maybe a couple times in your life total. So it's really important that people know about this. And our public education system isn't educating on it.
Let's make a little list here. What they don't educate them on. Let's take a legal pad. Okay, let's divide it into 6 vertical columns. Let's label each line 1 through 100. Better label this sheet A.
Yeah. No, absolutely.
Need more space.
Yep. So, and that's the thing. And sometimes people will say this, and they'll comment on my Facebook page a lot and say this idea that, well, don't stick it to the public schools, stick it to the parents. Parents need to educate their children. And I would say, yeah, absolutely. Parents should be educating children, but we've now gone generation and generation, and sometimes generation of parents that haven't taught their kids this. So the parents who are raising their kids, their parents didn't teach them either. So it's not like a choice that these people are making at this point. You know what I'm going to do? I'm going to not tell my kids about principal and interest. That's what I'm going to do. Because, some of these parents, they've rented their whole entire lives, which is fine. If that's what you want to do, that's fine. So they don't know anything about principal and interest. They don't know anything about a mortgage. They've never purchased a home. So the idea that only parents can educate kids, and I'm not saying that we should rely solely on public education either. That's not the message I'm giving. The message I'm giving is it's okay for multiple people to help educate, because sometimes I get the impression that people believe that only parents can educate kids on certain things. And I get that's how things used to be, but we're so far along in society that I think that everybody can help a little bit by just voicing this sort of stuff. It's stuff people need to live, So that's why I've gotten refinance. I'm going to address a question that came up last show about the fair tax. And I didn't know anything about it when the question was asked. So I said I'd come back today with a little bit of research. And as you guys have probably hear, my throat's still a little scratchy. I'm still a little clogged up here. So I didn't get to spend as much time researching it as I would have liked to. And I'm definitely going to spend some more time digging into it. But basically the idea that I got out of this thing called the fair tax is the idea that we would have our 66,000 plus pages of tax code reduced down to 113 pages. It would eliminate federal taxes, federal payroll tax, federal income tax. They listed a few others. It wasn't clear to me if it was all federal tax or just the ones that they had listed, and then replace it with essentially a federal sales tax. And the marketing behind this is that it's not a regressive tax, it's a progressive tax. We'll talk about that in a minute. And that it won't change the budget because it's revenue neutral, which means that we would still receive the same amount of tax dollars that we do today with income tax. So that's kind of like the marketing on their website. You know, the videos I watched some interview with people in Congress that support it, you know, some of the people that help put this together. And I'll say, I see some good stuff, but I also see some bad stuff. So I want to touch on both. The good stuff, they come right out and say, we should get rid of the IRS. Oh, I'm happy with that. That sounds great. Yeah. Let's.
Except we have to note here, that's never happened.
No,
there's never been a taxing agency in a major Western democracy where the taxing arm of the government completely goes away.
Yeah, and that'll get into some of the bad stuff too, because somebody's got to collect the tax, right? So they come out and say, yeah, we're going to eliminate the IRS. That sounds great.
Who do you want collecting your tax? Do you want the Army to collect your tax from you?
Well, and that's the thing. They suggest creating 2 new branches of government to handle this.
See how this works, folks?
Yeah. But elimination of the IRS, I could get on board with that if we're not replacing it with something worse.
If it was just going to, sure. I mean, if it's just going to go away, but that doesn't happen. You're going to get 2 more branches of government.
Yep.
You got to enforce the law, right? So.
Yeah, they got to do something. Then the idea that this would be a national fixed rate. Okay, I can subscribe to that, because the variable changing rates and tiers and all of that is what makes taxes very difficult to understand and so complex. And Michelle asked, would that also include a state tax on products? No, states would still tax their separate sales tax. So that's a very good question. And there is also some options for people below the poverty line to still basically be protected. So those sound like some good things, but let's address real quick the bad things that I see here. The rate right off the bat is very confusing, because they start off by saying it's a 23% federal tax, but it's actually $23 on every 77 spent. So already it's not.
How is it 23%?
Yeah, exactly.
Where do they get that?
Yeah, so it's a little disingenuous to me, because really it's a 30% tax.
I was going to say
is what it is, and they do clarify that further down. But I'm like, why are we even talking about the 23?
Thank you. Yes,
that to me right away is like, you just said how bad tax code is, how unclear and non-transparent it is, and right out of the gate you're doing the same thing. So I don't like that at all. The other thing is that there's exemptions for this tax on what they call basic necessities, basic human necessities, I think is what they said. That to me, and they say this will eliminate lobbyists. No, this will mean that the lobbyists will lobby for their product, their manufacturer, their whatever, to be deemed as necessary so that it doesn't get taxed.
Meet the new boss, same as the old boss.
Yep, exactly. So there, right off the bat, I see this and I go, we're just shifting where the lobbyists go. You know, we're making a new department that the lobbyists lobby at. That's it. So, brand XYZ is going to be tax exempt from this federal tax, which means government's going to be picking winners and losers, and they're going to be 30% cheaper than everybody else because there's no federal tax. So for me, if you were to do something like this, it's got to be everything. They can't be exemptions. As soon as you introduce exemptions, we're going to have lobbyists, we're going to have corruption, crony capitalism all the way through.
And 90,000-page tax code again.
Yep, exactly. And that's exactly what's going to happen. The other big issue I've got with it so far, and I didn't do a ton of research, so guys, there might be, maybe they've addressed some of these issues. I don't know. But right off the bat, the idea that they're like, it's revenue neutral. It's not going to change our budget. It's not going to change this or that. Guess what? That means we're paying the same amount in taxes. Like that's my problem. We have to cut spending if we want taxes to go down. What difference does it make if our tax dollars are being spent when we bought the product versus when we got our paycheck. There is actually a difference. There is, because you could invest that money and you could save it and then pay the taxes then. But you can do that with like an IRA account, depending on how you set it up. Now, there's a bunch of regulations behind that too. But the point I'm getting at is, guys, if we're at a point where we're just shifting when and how we pay the tax man, that to me isn't progress. That to me isn't fixing the issue. That to me is just, we've changed the name. It's not the IRS. Now it's the Sales Tax of America Group or whatever. We're still paying the same amount of taxes. It's just as we purchase products instead of out of our paychecks. If we want to fix this issue, we got to start with spending, guys.
And in countries who've tried to basically, this is similar to enacting a value-added tax, a VAT tax, which they wanted to supplant income taxes with. The countries who have tried this have wound up with both.
Yes.
Because the old tax never goes away. They just lay. And right now, just understand that the political vectors in Washington, D.C. are strongly favoring a VAT tax. Talk to your Canadian friends. Ask how they like their VAT tax.
See how it's going up there. So, guys, I'm going to do some more research on it to see if my concerns are valid or not, or if they've addressed them. I don't know if I'll get to it by next show, but I'll have something fun for us to talk about on Friday. So be sure to join me Friday, 1 p.m. on Radio Free New York.
This is an exclusive offer from Patrick Buick GMC. Save up to $9,000 on a new 18 Buick Encore.